sayijahile ukuthi siphinde thina sibonane. Ayenze ngiphile ngaphandle kokuthola uthando kuwe. Inhliziyo iswele uma baby zifike kuwe. Now, your love is fine, 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 fine. Now, your love is fine, 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 fine.
Good morning, good morning. Good morning, everyone, and welcome to this seminar on transformation today. You know, before I introduce our speakers and our topic, I must say I received a poem this morning, and I just thought, wow, while I'm in such a philosophical mood today, I just want to share this with you. Just I hope you will allow me. It will really just take a second. I can't read the whole poem, but it's by Mario de Andrade, who is a Brazilian modernist, poet, novelist. You know, there's all sorts of, and he lived in 1893 to 1945. And I just want to read this little extract from that before I start. I can't help myself. I want to live next to human people, very human, who knows how to laugh at their mistakes, who are not vain of their triumphs, people who don't consider themselves elected before their time, people who don't try to escape their responsibilities. I'm looking for people who defend human dignity, people who only want to walk on the side of truth and honesty. The essential is what makes the life worth living. I want to surround myself with people who know how to touch the hearts of people. So good morning once again. That's just a little word this morning. When we talk about transformation, ladies and gentlemen, we are touched. We are touched and we are touching the lives of so many people. When we talk about this, it is, you know, when I saw the topics for the day, I was so excited that we are going to talk about this. And what we're going to talk about, and I'm going to just introduce up to Raman Abrams. He is the co-head Hybrid Equity Old Mutual Alternatives Investments. And then he also has a guest which he will introduce properly, Rapelane Mabelane. He's the Group Chief Investment Officer of the Thebe Investment Corporation. And delegates, we are going to talk about funding the transformation gap today. And I think, you know, Old Mutual Alternative Investments is so well positioned to be our teachers today. We're going to talk about three broad themes. The first one is an opportunity for asset owners to participate in driving transformation in South African businesses across sectors. We're also going to talk a little bit about how transformation has contributed to employment and economic growth in South Africa. And then we're going to talk about the investment return opportunity in funding the transformation gap. And at the end of the discussion, there's no real presentations. We really want a conversation today. And at the end of about 30 minutes or so, we will allow you to then ask your questions. We can unmute you, or you can put that in the Q&A or in the chat box. So please, as we go through the discussion and you have anything to say, please basically do so. So yes, I think, I'm not sure whether you are ready, up to Raman. Thank you so much. And delegates, you know, when we have somebody like Abdul Rahman here to teach us, I'm very appreciative. You know, you could have been elsewhere. You know, your skills, your experience, what you know about this particular topic, and your guest today as well. We are really privileged to welcome you here. And thank you for each and every person that is listening, that takes the time to come and learn a little bit more of what is happening in this particular space. I'm really looking forward listening to you today. Thank you. The floor is yours.
Hey, thank you, Anne-Marie, and welcome to all our guests today. My name is Abdurrahman Abrams, and I'm part of the Old Mutual and Alternative Investments business, looking after hybrid equity in this business. So, I mean, I won't dwell too much on that, and also introduce us to Rapulani Mabeleni. He's from the Thebe Investment Corporation, and very experienced participant in the space, especially in the transformation space. And he has lots of experience in the topic today. So without further introduction from my side, I'll just hand over to Rapulani to just give a short introduction of himself and Thebe as well. Thanks.
Thanks, Mani. Good morning, everyone. My name is Rapulani Mabelani. I'm the Chief Investment Officer, as indicated, of Thebe Investment Corporation. Thebe is based in Sandton, Johannesburg, Gauteng. We are probably one of the oldest leading BE investment management companies. We have been in existence since 1992, really involved in a number of investments and management across various sectors: petrochemicals, power and infrastructure, business services, tourism at some point, food and agro, media, telecommunications, and technology. And my role, together with my team, is really to be responsible for all the acquisition, the strategy, all the acquisitions, all the disclosures, the funding, structuring, and effectively transaction execution. That's in a nutshell, Mani, who we are. Our profile as Thebe is on our website itself, so anybody more interested, you'll be able to get more details from there. Thank you.
Thank you, Rapulani. And I mean, you shortened the very kind of lengthy and really good CV of Thebe and yourself. So I think the guys would be well to do well to go and have a look at the Thebe kind of history as well. I mean, you guys are just coming off your 30th anniversary now, and it's been a long journey between ourselves as well as kind of Old Mutual and Thebe over many years. And I think that's part of what we're going to discuss today in terms of how do you fund the transformation gap, and to give some introduction and background to what we do as hybrid equity and alternative investments. The fund that we look after kind of traditionally has done many Black economic empowerment transactions as a funder. And what we do in that context is to provide funding to Black entrepreneurs, Black investment holding companies to buy equity in other businesses, and via that kind of deliver on that transformation agenda and kind of in very, very targeted partnerships. So I think from our side, we like to think of ourselves as an impact investor, and we've done that successfully for many years. And to talk about what the opportunity is here for asset owners, and how you can kind of allow your members of your pension funds to invest into this opportunity for profit while driving transformation, I think is a very important and relevant topic for us today. So maybe I'll ask you firstly, Rapulani, in terms of your view of kind of alternative asset managers allowing access to investing into transformation, what has been your experience, and what do you think kind of the right partnership model is to follow in this regard?
Yeah, thanks, Mani. I think very interesting, because if you look at the history of BE and transformation and funding, it actually is a mixed bag, I would say, right? A mixed bag in a sense that there have certainly been, particularly in the early stages of transformation, one saw quite a number of what I would call spectacularly successful BE transactions, with a number of individuals, few individuals getting extremely wealthy and rich out of that process. But unfortunately, some of those investments or entities did not, succeed and sustain themselves. And that, for me, is, at least for us as Thebe, I think, is part of what we see as the challenge in this regard, is how do we fund sustainable, you call them profitable, and fully agree, value-creating transformation objectives. And to do that, we think that it's quite important that, one, you've got the right partner. I think it's important, the right funding partner, a partner that's aligned with yourselves in terms of the values, a partner aligned with yourself in terms of strategy, and then together you are able to co-create what I would call a successful, value-creating, sustainable transformation agenda. Because if you don't have that, what you simply have is a once-off, but in no time that disappears, right? So as I said, very, very important to have the right partnership, to have very clear alignment about what you both are working towards, and creating something that makes sense. Now, we can talk maybe a little bit later about how then do we create and structure those transactions to ensure that they are indeed sustainable. Yeah.
Yeah, for sure. And I think it's a very valid point. And from our side, I mean, maybe just to give some context as to how we think about investments in the space, you always want to have a very sustainable transaction, and you also want to have all parties benefit ultimately from the transaction. So you're getting kind of a company that's being empowered and driven by the black shareholder that's now on the board and driving transformation in terms of job creation and all the other equity ownership benefits that come along with that responsibility. We look to the kind of shareholder that's being funded and what they're gaining out of the transaction from an equity ownership and value creation perspective. And then for the funder and ultimately the investor in the funder, as it were, in this case, how much benefit you get on a kind of risk-adjusted basis. And if the return is fair and economically viable to the investor who funds the transaction. So I think that win-win scenario is kind of what you're looking at when you do want to identify a transaction and hopefully fund a sustainable value-creating transaction. And for that, I think it requires some experience and some understanding of the market and selection of investment opportunity and how you look at that and mitigate risk in that regard. So I think that kind of covers the start of what we're discussing today, Rapulani. But I mean, from your perspective and maybe talking to the second point, and we'll elaborate further on what we started out with. In terms of transformation and kind of contribution to employment, economic growth in South Africa, and what you see as the kind of benefits of doing a successful transaction, what has been your experience at Thebe with kind of the funding relationships that we've had?
Yeah. So again, I think broadly, so from our side, we certainly as Thebe, and I think in my view, what should constitute a successful transformation funding agenda. We look at it both from what I would call financial domain measures, and what I would call non-financial domain measures. And by non-financial, I don't mean those things are not important. They are all important. It's just for ease of reference is to be able to say there are certain things which are sort of your core financial matrices that you look at And sure, I mean, when you look at those, you look at the cost of the funding that has been provided, whether it be the level of facilitation, the level of discount, the rate, the pricing that's provided there. So we look at those, right? Very clear upfront. I think it's very important to be very clear upfront about what sort of hurdle rates one is going to be looking at, right? Because we all invest for a return. In fact, my view is that you actually should be doing a transaction that's very successful, because when that transaction is successful, then you are able to create value for the beneficiaries, broader beneficiaries. It's all well and good, with all due respect, to on Mandela Day go and paint the school or something like that, right? But it's something else if you do something that's sustainable and hopefully lasts more than the 67 minutes, that you do on a particular day. So we look at the financial matrices. They're important, because you have to work on it. You're looking at cash. So we look at cash. I mean, is the investment going to be giving us cash, right? Because it is through those dividends that you are able to then plow into various, what I call it, enterprise development, skills development, socio-economic development. And that, by the way, money also talks then to employment and other social benefits of transformation. But you can't do that if you actually are not successful, if the investment itself actually does not make money. It's for that reason that if you're giving the codes themselves, right? The codes say to you, you've got to contribute a certain percentage, right? 1% or 3%, either to skills development, socio-economic development, or enterprise development. So it's important, therefore, that the transaction must make sense financially. It will also make sense financially if there is also realization of certain synergies. So at the end of the day, you don't get into investment to simply distribute that pie. You want to be able to get that pie and enlarge it from the first day that you got it. So we look at it from our side to say, when we got in, this is where the business is. How do we, together with our investee partner and our funding partner, how do we together enlarge this pie? Because once again, when that pie is larger than when you first started, you are able to contribute to those socio-economic objectives. So that overall, in our view, will define what then becomes your social return to the communities. So the transaction must make sense financially, no doubt about that, because it is only when it is making sense financially, looked at through some of those measures, that you are then able, in my view, to contribute positively to some of society's very urgent and pressing needs. But there are also what I would call non-financial measures, as I said. And I use this term very, very guided, because I know that there's a risk that people think these are soft issues that you look at, but they actually are important. I'll just give you an example. I mean, end of the day, you want to work with a partner that you trust. You want to work with a partner that you are aligned. You want to work with a partner where you share the same strategic outlook about where the business should be going, right? You want to work with a partner, obviously, in terms of product, a right team. It has to be the right team that you work with, the management itself, their presence in the market, where they're going, and so on, short to strategies. So very, very important that you take all of those things into account, because eventually that's what actually, in my view, will lead to the success of the financial matrices that you look to. The funding partner, very important in that regard. And if I were to talk briefly about our relationship with Old Mutual, certainly that's been the experience that we have had, is being able to share the same outlook of where are we together with our funding partner, taking this business to. Yeah.
Thanks, Abdullah. And I think that last point you mentioned is exactly how we, as a mutual kind of alternative investments, especially in the hybrid equity space, think about investing. And we look at long-term relationships and long-term partnerships as kind of a cornerstone of what we do as an investor. Because as you rightfully said, if you kind of have a long-term view of growing the pie, as opposed to just slicing the pie up and handing the slices out for everyone to eat, that doesn't really give you long-term benefit. We want to go like this huge pie, and the pie gets bigger if you invest kind of strategically and with intent to grow the pie. And because of that, you're kind of getting more traction in transformation overall, which is a big outcome for the kind of overall success of the investment. So we definitely aligned on kind of those impact and ESG factors, as people would call it. I think you even coined the term ESGT for your own investment process, where we think of all the kind of additional benefit and what people think of softer, but we think of more as qualitative factors that enhance your transaction and your kind of like-mindedness with an exceptional management team that you can really back over time to do the right thing with your shareholding partners that have a long-term view and kind of a kind of in view that comes with integrity and kind of credibility over many years, and those kind of values that you kind of want as passing a transaction are critical. That said, you're always looking for economic gain, and successful investments require good underlying engines in the business to generate return. And selection of the right business is key to kind of getting the right outcome for your investment. So I think that does talk to the second point, and maybe getting onto the final point in terms of your return opportunity for investors like yourselves, which in turn kind of benefits investors like us who fund the opportunities that you guys look to invest in. And I think it's across the board in terms of different sectors, different types of investments, different kind of parts of the capital structure, supporting equity. Where do you see that kind of making a positive return on investment in some examples that you have on your side, Apulani?
Sure. I think just before that, I just want to underscore the point about values. I think it's so critically important that there is also alignment on values. And again, it may sound like one of those soft points, but in my other life, I also happen to be a lawyer. And I know that you're not gonna govern any business transaction through contracts. If you're gonna get into a funding or a business transaction, and every now and then you've got to open the drawer and look at what the clause 37.3 says about a particular issue, it's a disaster. When you are aligned on values, contractors are important, we've got to get them right, but when you are aligned on values, you know then what you're working towards. So I just wanted to underscore that part there.
It does comes with years of experience.
Absolutely, absolutely. And I've seen a number of transactions where every now and then somebody has to go and look at it, and it really doesn't work. It really doesn't, because it's when things do go wrong and you are aligned on values that you realize, okay, there's a trust relationship here, we are aligned on values, and we then all become solution oriented. And I've certainly seen that, at least in terms of the partnership that we have had with yourselves and the All Mutual Group, for which we are grateful. But just to your question then, sorry, Mani?
No, go ahead.
Okay, yes, absolutely. I mean, investors invest for returns. So let's be clear, these are all for profit transactions, these are all for profit organizations, albeit with a social conscience in mind. And certainly if you look at the tagline, building our communities, we say, is our bottom line. And we say that not just as a tagline, a marketing gimmick, but it truly is at the heart of what we do, right? And so it's important that our investments do generate returns, sufficient returns, which obviously you would have said right up front, right? So remember initially when I said, how do you measure it? You're going to look at those financial measures. You're going to look at what are the hurdle rates that I'm looking at. And that then determines eventually what the returns become. In between, it's about product development, it's about market share improvement, it's about all the good things that any solid business and management should be doing to grow that pie, right? But I think it's important, especially when we're looking at equity transactions, we're looking at ownership, right? We're looking at transformation, that there should indeed be such a case. I mean, publicly, we all know of a few, even listed entities where BE schemes, people got in, and after 10 years, those transactions are underwater. I don't think that is what we want to work towards as an industry. If we are to be true South African corporate citizens, who want to make a difference in how we fund and what we do, we've got to ensure that the transactions we fund, the funding terms that we put in place, the structures we put in place are such that those transactions at the end of the day do generate net value for the owners of those assets. Because at the end of the day, I mean, I know even the transaction codes, I think there's about 8 points or so, if you look at the code 100, that are allocated to net value. But it should go beyond just the 8 points that are there. Because how do you feel when you get you invest and fund a particular transaction or entrepreneurs or management and so on, and after so many years, when they look at what has happened, the company has received all the BEE points, has received all the government tenders, has received all other tenders on the basis of them being either level 1 or level 2 on the back of the BEE partner, but there is no net value for those people. So certainly from a Thebe side, we look at that. I mean, I can't mention examples here publicly, but there are a number of transactions that we have done with yourselves and with other partners also, where at the end we do assess, and 1 or 2 of them did go wrong. But I'm very happy to say many of them actually did indeed result in net value. There is a transaction we did fairly recently involving management and staff of Thebe, and by that I mean really in that broad, but not that broad sense where nobody actually has anything, right? But broad enough to actually have a meaningful stake. Yeah, Mani, you smile because there are also transactions we've seen in the market, right? Where people say there is it's a broad-based scheme and it's got in communities and like thousands and thousands or so. But actually, when asked those communities, they actually have not seen anything, right? Yes. So I fully subscribe to broad-based, but it's got to be such that it's meaningful. It's got to be significant. Again, there are examples in the recent past, and unfortunate past, really. We saw some of this even in the Zondo Commission issues coming out about, this community was supposed to be benefiting, but actually the community doesn't even know about the transaction. So I think the industry needs to play a responsible role in that regard, a very active role in that regard of saying, we are going to be funding Thebe, we are going to be funding ABC company, whatever, XYZ, but this is what we want to see at the end of the day, right? And of course, ESG, in Thebe, we call it ESG plus T, because we include the transformation in that, I think goes some way towards addressing that. But I think, and I would really advise and recommend highly that the industry develop for itself the measures that they use. So to give an example, Mani, at Thebe, we have our own scorecard, and our own scorecard takes as a base, because the base is the law, right? So the base is the GTIC codes, but our own transformation scorecard goes way beyond that. And it's not simply just measuring it. Management and staff actually get measured to extent where their own financial benefit depends to a large extent also to what extent that scorecard measure has been fulfilled. So I think it's very important if we are to indeed get the kind of returns that we're looking to contribute positively to socioeconomic development, to ownership, youth issues, women issues, people with disabilities, people from rural areas, and so the vulnerable groups, let's call them that. How do we ensure that there is indeed the funding that we provide does provide some benefit to those, but in a manner that is tangible, not in a manner that of some of those that we've seen in the public, where there's a claim about we empowering the youth, we empowering women, we empowering all, but actually there isn't. And I think that's really where, for me, the challenge is in terms of getting the balance.
Yes, and sure, I have to agree with all those points you mentioned there, Apulani. And that's exactly how we kind of consider investing when we do select an opportunity to get involved with and a partner to fund in that context, because it must be someone that shares those values and understand that there is a bigger picture, and it's not purely kind of engagement of a specific individual, but a broad base of kind of meaningful economic participation, but also something that kind of makes a difference, and you can then use that return that you've made on the investment to positively kind of influence your community. So I think that makes it makes for a good kind of conclusion to the discussion. But maybe just for me to sum up, selecting a good business when you are investing is critical, because along with selecting a good business, you can kind of mitigate a lot of those risks that you face on kind of the downside, especially in tough economic times. And as such, you kind of go through that value adding process along with your partner to grow the pie that you've invested in. Ultimately, when you do exit from the transaction and you are looking to exit as an investor, you have a much bigger pie to share amongst all parties. And I think that that alongside these kind of qualitative factors around ESG in your selection process and the impact that you're going to make on each investment that you've kind of invested in is kind of a recipe for a long-term and good sustainable transaction and value-adding transaction. So I mean, maybe we pause there, Rapulani, because I'm just conscious of time and there may be questions from the audience. If there are any questions, maybe we'll stop now and take those questions. But if not, we can continue talking. There's obviously a lot to say about this topic, Rapulani.
Yes, yes, thank you.
Quite a lot, man.
Right. So let me then just open the floor, and I don't see any questions in the Q&A box or in the chat box. If there's anybody who wants to just raise okay, you can raise your hand and we will unmute you. If you have any questions or comments on what we are discussing at the moment. Is there anyone that wants to? Let me just give them a moment, because it takes a moment to just get to raise your hand. So while we're waiting, let me just ask this question, and thank you very much for the conversation so far. You know, there's Jitendra and Nadasen. So let's just start with Jitendra. Can you, and then I'll come with my question. Can you please unmute?
Thank you, Anne. I appreciate it. Gentlemen, thank you for your time and for this valuable experience. I just want to find out, have you had a chance on the weekend to read the article by Rio Koza, where he says BE should copy Afrikaners, and that laws underlining economic success should be repurposed for Blacks? So I just want to find out if you've had a chance to read that and what's your view on it. Thank you.
I haven't read the article from BATSETA. Fulani, have you read it?
I've read it. I've also read his book, which I will also highly recommend. Right, it's quite an engaging book on leadership. Right, so Mr. Koza is not one to be shy to raise his points, and he says that very clearly in his book also. I agree. I mean, I think, you know, if you look at the history of transformation, while at least in terms of the history of BE, I think there is no doubt about the rationale for BE, right? There's no dispute about the rationale for affirmative action. Remember, when we started, actually, we started with just AA. I think many people do forget that, right? But if you go and look at even the legislation, in fact, not even the paper, you know, before any law is put in place, there is a white paper, there's consultations. It sets out the rationale. And it does that by tracing our very sad history, a history which we all know. Mani and I probably would not have been in the positions we were in those days, for reasons which were deliberate, not for lack of skill or competence or otherwise, right? So it captures that context, and it then says, but how then do we move forward? Because we all agree that unless we change that, we're not going to move forward. Other countries just not going to move. You can't have a country where 80% of your people are not involved actively in the growth of your economy. They're not participating. It just doesn't work. It's a recipe for disaster. And in fact, it's not good for business, because you need social stability, you need political stability. But more importantly, that's social stability for businesses to grow. Businesses thrive when their people, country's people, are also doing quite well, because they buy our goods, services, and so on, and they contribute to the general growth and GDP. So I fully agree. However, what has happened is, I think along the way, and again, this is a very big topic, Jitendra. I think along the way, we lost the plot somewhere at, and whether it's government or businesses or so, to a point where actually we are not seeing the benefits of this. I mean, as I said, there are examples of publicly listed entities where after 10 years, a scheme was put in place, but that scheme is underwater. What has it achieved? You were talking about Mr. Koza. There's also an article over the weekend, or Friday weekend, by the new BE commissioner, Mr. Tsiso Matuna. And again, he laments what? He laments the fact that almost 20 years later, you're going to look at every BE report that has been produced. We actually are regressing. We are not making progress in addressing employment equity, skills development, and so on and so forth. So we've got to go back and say, let's look at what led us to where we are. Why did we agree upon this? And where did we go wrong, and how do we improve that? But that's a topic again itself. We'll probably need a whole half a day on that. And certainly from my side, lots of examples we can share.
Yeah, and I think just to add to what Rapulani says, this is a serious issue, and I think there's kind of a lot of detractions or downsides to the existing, call it the implementation of the legislation, and the likes of ourselves that invest in this space. We kind of try and do a much more sustainable and long-term value creating transaction, which should be the way guys do it. And it is maybe a call to action for guys who have capital to invest more in people who understand how to do these transactions and grow the pie, as we said. So I think that more is kind of what this type of discussion leads to, is people being aware of very competent and skilled individuals that have been doing this for many years, and organizations that have a kind of a track record of doing it successfully, and use that as a model to kind of implement, as opposed to doing those transactions that didn't work and kind of were unsuccessful for a number of reasons.
Yeah, we are way down the line there. I think we've learned a lot. There should be more successes, like you said. Yes, there are sometimes that things fail, but I think it's more far and in between. There are some questions that I will take now, but I hope that I pronounced the name correctly, Nadasin. If we can just unmute and your comment or question, please.
Yeah, thank you very much for the informative presentation, firstly. I think there is just one clarity that I'm seeking, because I get the fact that everything cannot be relied on contracts alone. And what comes out glaringly is that we must look at the values, and the trust relationship comes out glaringly. Is there any other values that we should be considering, say, for the trust relationship? Thanks.
Yeah, and so that I'm not misunderstood, any investment must obviously be based on very solid, legally valid, binding, and enforceable contracts, right? So that's important. But yes, I agree with you. Beyond the trust and the values are very important, but I think very important is governance. It's leadership, I think. What we have found certainly from our side is cultural alignment. I spoke about that alignment earlier on. So when I was speaking about the right team, is the team aligned in terms of the values? Do we share the same view of what the future should look like, right? And by saying same view, it doesn't mean we may agree about every little tactic, but we agree that we are all working towards the same goal. Because certainly you enrich the debate, you enrich the product when you actually do have different views, right? But you align about the vision of where you want it to go. So I think that's important. So I would say leadership is important in all of this. I think governance is very important because once again, governance goes beyond just the contracts, right? Governance is me now doing the right thing, and that's the integrity part. Doing the right thing, even when you are not asking me as a funder. I know what needs to be done. and I'm going to do the right thing. And when I have to report, I report because the agreements require that we do report back, right? Whether it's governance, whatever undertakings that we give. But all of that is driven at the end of the day by the fact that integrity values, or integrity as one of the values, leadership is important for us. I think there is an issue about alignment, and I'm talking about more about cultural alignment, that I think is also very important that you should take into account. But before everything else, certainly do your due diligence. Certainly do your due diligence. You will be surprised that people know about this way, due diligence, but I have seen examples where people say, but was there no DD done here? Because this kind of thing would have been picked up during the DD. So very important that right up front, do your DD. I think in your industry, in this industry, it's called know your partner, among other things, you know. But know your partner can be very limiting. I think for me, it should not just be the tick box of saying I've received a 3 months bank statement, or rather no more than 3 months a utility bill and something like that. The due diligence is then understanding the team that you are partnering with. And it is in those sessions that you have with management and your borrower, if I can put it that way, the people that you invest in, that you're going to pick up whether you are even aligned in terms of the values they espouse, whether you are aligned in terms of the kind of vision that they want to take these things to. So yes, I think over and above alignment on trust, I think very important, do your due diligence, be involved governance-wise in the business going forward, but right up front, be aligned in terms of where you're going. Thanks.
Yes. So the one, I think it's more a comment, but yeah, I would like to hear your views on this, is to say that surely from a trustee point of view, the investment into startup businesses does not contribute towards the payment of monthly pensions to pensioners, but rather towards the long-term growth of the young contributing future pensioners. You know, so yeah, I think the question here is around sustainability and looking into the future. You know, I'm not 100% sure whether funds, retirement funds, asset owners really sit down and say, you know, what is it that we are dealing with here? Where are we going? You know, having that sort of forward-looking vision, and then making sure that when you invest, you find that partner that can actually do that for you. So yeah, any comment on this comment to say, but you know, it's more about the future rather than the monthly payments to pensioners?
So I think it's a very good question, and one that guys grapple with often. From our side, we as a fund, we generally have lots of liquidity paid over to us through the life of the investment. So it's not purely looking at the long-term investment with a single exit point many years into the future. I think with the likes of ourselves that provide that mezzanine funding or like higher yield funding to partners like Thebe, we have a profile of cash that comes at the investor almost throughout the transaction, maybe 1 or 2 years in, and you do fund, like an example of a transaction that we did that pays a monthly cash flow. We do fund startup businesses via another entity, and they pay a regular cash flow every month over to us as the fund, who then pays that over to investors. So there is a mix of different liquidity kind of profiles to transactions. But I think generally, if you're sitting in the kind of middle of the capital structure, where you're not an ordinary shareholder in the business, there is funding, and the funding gets a return in cash as well as growth in equity upside. So I think when you're looking at an investment like ourselves, you're paying cash on a regular basis to the pension fund that's invested in the fund, and you don't only wait for a long-term outcome. That said, I think if you are growing the pie and growing the business, you require some of that cash to reinvest in the business, and that's where you look to kind of support the business with kind of follow on new investments as well. So it's not necessarily take only a long-term view. I think you can mix it up with getting cash in the shorter term as well, cash over the medium term with some upside at the end of the transaction as well, and it gives the return to an investor kind of a balanced view of kind of getting a return in cash and upside you don't necessarily only need to take a single view on how you invest over here. Just to reiterate that point, so you are getting cash. It's not that you're not getting any liquidity in the kind of lifespan of the investor. And Thebe would do the same. I think Rapulani can comment here. They need dividends to kind of support their business, and if there's no dividends coming on a regular basis, that wouldn't be the type of investment that they would do, unless it's kind of a very strategic long-term investment that they're kind of looking to build up over time. But almost inevitably, if you're looking for good businesses that are existing at the moment, they would be paying cash on a regular basis, and that kind of feeds into the shareholders via dividends. Hopefully that answers.
Yeah, no, thanks for that. The other issue that I see it's raised here, is that change is not easy, and looking towards transformation, moving away from old regime companies, it's not easy to convince maybe some of the trustees on the board that, you have to transform, you have to think, differently. So I think the question that was raised here, how do you quantify success? That value creation. Maybe you can give us a bit of examples of, you are sitting here, the board asks you, okay, you want us now to consider you, but tell us about your success. So how do you quantify that? What is it that you will tell what is it that you will tell the board, the trustees?
I mean, I can start, and Apulani can add as well. From our perspective, we obviously it's there's kind of a number of factors that you measure success on, but ultimately the first line of kind of success is the kind of track record and economic outcome that you've gotten. So you can look at the IRR and the times money back in terms of how much the actual rand value of the returns has been over a number of years. And I think that's kind of a good measure in terms of how you compare to competitors, as well as kind of the different asset classes out there. So if you've done well from a return perspective, and that's the economic return perspective, that's a good start. I think over and above that, and this is where kind of the qualitative factors make a huge difference, is around the impact that you've had. You kind of measure those kind of ESG and T factors in your investment kind of metrics and return, and that is all built into kind of how you think about getting involved in the investment from the outset. So you want good economics, but then also the ESG factors around the environment, the social kind of governance issues, the transformation benefit, all of that gets thought about before you go into investment. So we can kind of comfortably say that we've met those kind of metrics as well, over and above the economic return that's been very, very good over many years investing in this asset class as well.
Rapulani, sorry that I'm interrupting, but Rapulani, my second question around this, or over and above, risk return, talk to us a little bit about impact. Yeah. Because it's community based and so on, but I see that there's still, when we talk about investment and community and transformation, we still keep with risk return, but are we really highlighting the impact that we have in communities? Maybe an example about real community impact that's quite tangible and sustainable, obviously. Do you have an example of something like that?
Yeah, so I think just to underscore again, so certainly from Thebe's side, we look at three measures: growth, and we look at cash, right? That's important, right? And that's part of your total return, right? Calculation. And then we've got the third aspect is transformation, or what others would call impact, or what others would call social return. What are you looking there? You're going to look at, what have I done something to improve, to create enterprises? So for instance, in Thebe, what we do is we have even a number of people who are now suppliers, right? And we look at how have we made them grow. I'll give you an example. I mean, there's a group of colleagues who were our HR or labor specialists. And we have them out, create a company for them. But beyond that, beyond just now consulting for Thebe, they also provide HR consulting services to now, I think, about 37 or so other companies. So not only have they been made to exist, but they've been made to grow, and I think they are sustainable because now they have more clients. Same thing with other service providers, such as our secretarial services, who also now provide secretarial services to a number of companies, including other companies that we invest in. So it's also about how do we realize synergies within our investee group of companies? How do we cross-sell to the extent, obviously, that all of this is allowed from a competition law point of view and so forth. So it's about ensuring that there is, as I say, synergies, cross-selling amongst each other, but also really growing that pie. We look at the vulnerable groups that I've referred to. Is the investment that we're going to be made, how is it going to contribute to the youth and so on and so forth? Environment, very important from a sustainability point of view. We do have investments, some of them still in the what we call the old economy, but what other things are being put in place, right, to get them into the new economy? Are there technologies that can be used to improve their emissions, to improve the way they operate, and so on and so forth? All of this is part of us looking into communities. Our view is, at the end of the day, though, what you don't want, I mean, we always have this joke at TEB, we don't want to be building toilets. We actually want to be building mansions for our communities. We want to be building mansions. We're going to build mansions for them when financially we are doing very well, to give them to get the kind of returns that will allow us to make investments that make an impact.
Yeah. And I think this is the comment, I'll get to all the comments, but I think this is the one comment that I'm resonating as well, and I think you've mentioned it during your talk, is almost 30 years into our democracy, you know, all the transformative legislation is still talking about how to get it done, you know. So what needs to take place to show that transformation will benefit everyone in the long run? You know, what needs to happen? I mean, we have scorecards, we have, you know, all sorts of things, but what is it? What is that thing that gets us going? Or that will get us going? I mean, we can't sit here in the next 30 years and have the same conversation, guys. We can't. Yeah,
I was going to start with that. If we're still having this conversation 30 years from now, we wasted our time. And we shouldn't even start. But that said, I think you have to actively make a decision to kind of invest, especially if you have capital as an asset owner, and contribute to people and institutions and teams that have done this successfully. So do your due diligence, understand who you are speaking to, and over time they can display and tell you what the success stories have been in the past and will be into the future if you're following that recipe. So I don't think you're just going to take kind of a scatter or shotgun approach to doing this type of investment. You actually have to follow a very kind of well thought out and understood recipe for doing it successfully. And then you will make a difference, because if you have a number of these big success stories, and Thebe is an example of a massive success.
Somebody must just mute, please. There's somebody that's not muting. I see that, you know, time is flying, and we have a few minutes, but, you know, I still, I want to ask this question, and, you know, whose responsibility is it? Sorry, do you want to also just comment on that? Because I just want to move on to a next important one, but maybe let's give me, Rapulani, let me give you an opportunity to also just respond.
Just a quick one, and Marie, it's a very good question that is being asked there, and it's a critical question that we must, all of us as fund managers and trustees and so on, engage with, because I really think that until we realize that the success of our own funds depends on the success of the country, we're actually not doing justice to the people on whose behalf we manage in this fund. Because those pensioners, either the young ones that are contributing now or the ones who are already receiving it, if we are not doing the right things now, we actually are putting them in jeopardy. So that social stability is important. When we have that social, when we have managed to create businesses that work, that employ the majority of people in our country, we've got youth that are gainfully employed, and so on and so forth, you reduce the risk of social instability, and thereby you protect the value of the funds, the investment that we're holding on behalf of our beneficiaries. I think it's important as practitioners in this field, whatever level we are, that we realize that it actually it's almost a selfish thing. We've got to do it to protect the value of our own investments.
Yeah. So what you are saying, and for our delegates online, is that, you know, this is not the responsibility of your asset manager or your consultant or somebody else in the value chain, but it is the trustee, the board of trustees, that needs to be intentional in terms of what they want to do within this specific space. And that brings me back to the earlier comment, is to say, you know, you either go with what you know, or you are intentional and say, but what is my contribution? What is it that we want to do, you know, to contribute towards this transformation agenda? And if you are not intentional in that, you know, there will be a scorecard that forces you to do that and all sorts of other things, but that should not be the driving force behind what we are doing. The driving force behind what we are doing is, what is our contribution now for generations to come? Because really, I won't be around 30 years from now. It would have been lovely, I hope. But there are many of you in this room that will most probably still be there, you know, and I don't know whether you will remember this conversation, but retirement funds will have to take time to sit down with your asset managers and your consultants to say, but, you know, where are we going? What is it that we need to achieve? And, you know, there was a comment here that says, always keep in mind that pensioners form an integral part of communities. Their income enables a portion of spending pattern in the economy and social support in communities. They are looking after the grandchildren. They are doing lots and lots of things, you know, that is still there. Right. So there's just another comment that I don't want to lose. Basically just saying, would you partner with venture capital businesses that invest in SMEs and that have existing portfolios? Because I think the comment follows to say big partnering is transformative, isn't it?
Yeah, so I mean, maybe a quick answer is you obviously need to find the right investor to invest in venture capital. So I think that's a different skill set and a different asset class, and there are a number of kind of participants in this industry, but definitely there are guys who specialize in that space and will be able to give you kind of good guidance and successfully partner with the right businesses here. So I think maybe just to kind of round off that comment, there's so many different options for people to make the conscious intention to invest in transformation, as it were, be it in the products that we offer or other managers out there. And you can kind of find credible options and credible teams that manage these investments for you to do that for your pensioners. Thanks, man.
Right. So we have 3 minutes. So I'm gonna see. I see, Madison, you had your hand up. This is your final question or comment, and then we have to almost close. Thank you.
Oh, my hand was down. I think it's the old hand. Thank you very much.
I did an old hand. Right. So thank you very much for a really an engaging conversation. You know, we don't want a 30 years from now conversation, but there is encouragement that, you know, retirement funds need to just go back and sit down and say, you know, what is it that we want to do? Where do we want to invest in this particular space? How do we get it done? How does this contribute to, you know, the sustainability and value creation conversation within our funds? And then lastly, it's not only about risk return, but also the impact that we're looking for. And there is no evidence that participating in the transformation agenda is not going to make this happen, you know. But it is something that should be discussed in our boardrooms. So up to Raman, Rapulane, thank you so much for, sharing with us today. And yeah, we really have to come back and have further conversations. And then let me see if there's a last little thing. Emphasizing women inclusion in transformation is a fast way to fast track the impact of women are more likely to invest in most needy sectors. So yes, it is all part of this conversation. Retirement funds, delegates, get to the boardroom and have the conversation. You have people here, you've met up to Raman and Rapulane. I'm sure that if you have any questions for them subsequently, they will be available to come and have those conversations. So before I close, I just want to remind you, we're having an infrastructure excursion. There are two issues that I want to raise. There's the Rio Guide training, Bianca. The Rio Guide training, can you just remind us when that will be? And then we're planning a infrastructure training and excursion in October. Bianca, if you are online, can you just quickly share that before I say goodbye? Bianca, there you go. Continue. Right, what you see here on the 15th and the 16th of October, we have an in-person training session on the Rio Guide. It's all around the integration of ESG into the investment decision-making processes of retirement funds. You still have time to register for that. And I think it's then the 18th and the 19th of October that we are having this excursion and training on infrastructure investments. So thank you very much for spending time with us. We are looking forward to our next session also on the 3rd of August. And I hope that you have a lovely day. Thank you so much. And I'll see you soon.
Thanks,
Thank
everyone.
you. Thank you. Bye.
Yes, everyone. Okay, bye.
Bye.
Bye-bye.
Bye.